Everyone, thank you very much for joining today's webinar or video post. We're getting a lot of questions at the moment on obviously the housing market and in particular the financial and mortgage market. So we thought we'd bring in a special guest today, someone we've worked with for a while now, which is Hiten, MD of Visionary Finance. Hopefully to just run through some of the key questions that we are receiving and answer as many of those as we can in this short video. So Hiten, welcome to the webinar. If you'd like to just give yourself a little bit of an overview of the company Visionary and what you guys get up to.
Sure, thanks Andy, thanks for the introduction. So yeah, Hiten Ganatra Visionary Finance. We are independent mortgage advisors, have access to over 60 different mortgage lenders. As I said, independent, so we're not tied to any one particular lender. There are obviously multiple lenders out there. Clearly, we're in uncharted waters, uncharted territory currently with the way that market's going with the COVID-19 outbreak. But in essence, as I said, we are fully independent. So we act on the client's behalf to ensure that we secure them the best mortgage deal. And the client, we're on the same team in essence. So as I said, we want to make sure we get the client the best deal based on their circumstances, their employment circumstances, their personal circumstances, etc. And our job is to secure them. And we manage the process from start to finish, end to end. So, from our perspective, it's to ensure we get the right deal, the right product, the right lender for the client to suit their personal needs. Brilliant,
thanks for that, Hiten. I suppose we've got 4 or 5 questions we'd like to fire at you and hope you can solve them all for us.
Sure.
So we just jump straight into those, if that's all right, Hiten. The first one I think that most of our customers are asking is if they've got a current mortgage application, whether that be on a property that they already own, hence a remortgage, or they're purchasing a property at the moment, what does that look like for the industry, for their current application, and is there any advice you can give them?
So there's 2 essence. With respect to new purchases, before the lockdown took place, if there was valuations that had been taken place on a new mortgage application, for example, a new purchase, lenders have continued with that application as they would do normally, and the underwriting times and processes are taking a little bit longer because, of course, they've had to sort of move around staff. There's people that have been, staff numbers have actually dwindled because of people being off sick, etc. But the applications have progressed as they would do normally. Where post-lockdown, where valuations haven't taken place, those applications have still been largely accepted by the lenders, and the product that the clients applied for has been secure. However, lenders have been insisting upon ensuring that a physical valuation takes place. So once the lockdown has been lifted, the last thing that's going to be left for the lender to carry out is the valuation. So in essence, the application is being underwritten as it would do normally, but the offer is not going to be issued until a valuer can physically go and inspect the property. Now, there is a condition to that in the sense of if the loan to value is less than 60%, then some lenders have been able to carry out what's known as desktop valuations, which are known as AVMs, automated valuation model, which they use effectively algorithms and sort of clever models to work out to see whether the property value is in line with what they expect it to be, and they're issuing offers on that basis. But that is, of course, only if the loan to value applied for is actually under 60%. On remortgages, again, the similar principle's been applied. So a lender effectively is saying that if the LTV is low, we're happy to issue a mortgage offer based on an AVM, and that's pretty quick for it to be turned around. If you are capital raising, you're increasing your loan amount, etc., then again, the underwriting is subject to the lender-specific requirements. So it might be that they want to carry out a physical valuation if you're increasing borrowing. So again, it's very fluid. There isn't one rule that kind of applies to everyone or one process. It's a case of just we're sort of managing and negotiating each client depending on what their requirements are and depending on where they are in terms of the application phase.
Yeah, so I think the message is it's probably a case by case.
Absolutely.
To apply on. Okay, brilliant. The second one then, I suppose, is if you're considering moving into a new application, if you've not started the mortgage application yet, whether that again be on a remortgage or you've found a property that you really want to pursue. I suppose the next steps for people for applying for those mortgages currently.
Yeah, so what's happened with with where lenders are at currently is that there are some lenders that have actually said, well, we'll carry on business as usual, but depending again on the point that I mentioned about the loan to values, if it is a lower loan to value, we're still able to make applications and secure lending for the purchasers, and the lenders are carrying out the AVMs, the automated valuation models. But where, for example, that we haven't necessarily got an application where the LTV is very, very high. What we're saying to clients is let's start the process, let's understand your circumstances, because what we do is we carry out a fundamental due diligence process on the individual applicant to make sure that we can secure them with the right mortgage product. Now, it might be that the relevant product or lender that's available that is suitable to them pre-lockdown may not currently have the right product available, but let's get the paperwork through, let's get the fact find complete, let's get all the due diligence, internal due diligence complete, so we're ready to press the button the moment the lender come back into the market, and we can be certain that the lenders will come back to the market. It's just a matter of time. So let's almost lay the foundation, get everything teed up, so that the moment the lenders are back in the market, we can start the process.
Okay, brilliant. I think the above two questions might answer this one, but I suppose the question is, why are there fewer lending options out there for purchasers at the moment?
So we're in unprecedented times. I don't think anyone could have ever anticipated the United Kingdom being in lockdown, in the manner in which it has. I don't think we could have expected the government ever to pay people's salaries in the private sector. So we're in uncharted times, and I think what a lot of lenders have had to do is to readdress their sort of model, and to think, actually, we are a period of uncertainty. What do we need to do? Clearly, a lot of lenders have got their existing client bank, and a lot of clients where the government have offered them their mortgage help scheme, where in essence the mortgage holiday is provided to them, and a lot of them have actually been swallowed up, or their capacity has been swallowed up in trying to deal with their existing customer base. So they've had to make a decision as to whether they carry on with new business, bringing in new business in, and of course, don't forget there's the restriction about the lockdown with valuers not being able to go out and visiting on site. So whether they bring in new business, or they channel their sort of staffing numbers into existing clients and dealing with the mortgage holidays that a lot of clients have actually requested. So they've had to make that decision, and based on that decision, I think a lot of them have effectively said that, look, let's rein back in the new business flow, and let's focus on servicing our existing client demand and existing client requirements. So it's not to say that we don't want to be lending. Of course, they make a lot of money lending on mortgages, etc. But the point is that they need to service what's directly in front of them, and directly their priority is their new customer. We've had so many notifications from lenders that have said, look, our priority is our new customers. And now what we're seeing, given the fact that we've been in this period now for a period of almost 3.5, 4 weeks now, a lot of lenders have begun to come back into the market where they are offering new products. They're releasing underwriters who were dealing with back office functions, now dealing with new business. But of course, because of the restriction in the movement of people, in essence, we're finding now that there is still a limitation in the product's availability, purely because lenders don't want to, bring in too much business, because otherwise they're back to the same position where they can't cope. So that's more the concern, the fact that they want to make sure that they feel their way back into the market, and slowly sort of open up their lines of lending.
Yeah, brilliant. Okay, thanks. We briefly touched there on mortgage holidays. I don't want to go into that right now because obviously it's quite a minefield of information, but we've got a document that Hiten's actually produced from Vision Refinance, and we will put that out on our social channels, and also put it on one of our pages on our website. So if somebody has got a query about mortgage holidays, it's a full sort of fact-find Q&A session on that, which is really helpful. So we'll get that published as soon as we can. The fourth one I've got here is the Bank of England base rate. So it's obviously at an all-time low. Are consumers seeing the benefits of that at the moment? And if not, why not?
The short answer is no. The pricing, the mortgage pricing that lenders have bought out. In fact, when the lockdown was announced, we saw a number of lenders withdraw their products, their current product range, because the base rate had reduced from 0.75 to 0.1% within a matter of sort of 10 days. And what lenders had done is effectively increased their lending rates by 35 to 50 basis points. That's between sort of 0.35 and 0.5%. And the reason for that was, of course, to create that level of restriction, to say to buyers that, well, actually, even though we're in the market to lend, we're not comfortable lending currently, and hence what we need to do is we need to increase our pricing. And the reason why they weren't comfortable comes back to the previous point that I discussed about, was the fact that they didn't have the capacity, the personnel, to be able to deal with the influx of applications. If they reduced the rates in line with Bank of England base rates, for example, they were likely to get an influx of applications which they would not have been able to cope with. So the short answer to your question is that no, the rate reductions haven't been yet passed on, but as things return back to normality, we've had conversations with a number of sort of mainstream and specialist lenders who are saying we are itching to get back into the market, but we need to make sure we kind of push these products out at the right time so that we've got enough personnel to be able to cope with the applications that are coming. I mean, just to give you an example, Barclays, they within the space of 1 week, they had a couple of rate reduction or price changes to a number of their product ranges. Now that is unprecedented. When lockdown took place, within the first 5 days, there were 900 plus product changes that had actually come into effect. So that's lenders either withdrawing from the market or increasing their pricing. So, and that's unprecedented and normal. Abnormal, in terms of what had happened there. So, and just coming back to Barclays, they had a couple of call centres in India that dealt with all the back office functions, etc. Now, India announced their lockdown. With their lockdown being in place, they didn't have the staff to deal with the back office inquiries, so they had to bring it all back to the UK and to cope with it locally. So again, businesses have had to adapt and change the way they operate massively, and that's the same for banks as well. So that's the reason why we haven't seen the price competitiveness that we would have expected. But as I said, the moment the lockdown is lifted, I would suspect that a lot of lenders are going to come back into the market and fight for the business that they necessarily want.
Okay, brilliant. Brings us on nicely, I think, to my last point. And I'm sure you've got a crystal ball there next to you.
Yep.
But where do you see the future? What do you think the next 12 months might look like, in particular, obviously, in your industry, which is lending and mortgages?
Yeah, so I think, banks make money by lending. They've got their targets. That the housing market typically in the UK is pretty much based on mortgage borrowing, and the fact that they make good margins on if you look at their savings rate, they pay out very low, but they charge quite high interest, so they make a good level of money on their lending. So I would suspect that the banks effectively will be coming back competitive to continue to make money. In terms of the housing market per se, in the UK, we've typically always had a shortage of houses. People that want to buy houses, there's always been a shortage. And if you take the simple rule of supply and demand, the demand for housing and homes is always going to outstrip the supply, and how quickly developers can build. So I just, if I were to sort of predict where the market's going to be, I think that there will be a little bit of a pain, because I think whilst we hit almost a little bit of reset, button, because we don't know what the economic impact's going to be, there will be a level of reset. However, if you look at historically, if you look at the 2008 sort of crash, the financial crash, it was sort of on similar levels, where the housing market was very, very uncertain, volatile for a period of 12, 18 months. But it came back even more stronger afterwards, because I think that period of reset did take place. And I would suspect that, in 5, 7, 10 years time, this is going to be seen to be a little bit of a blip that kind of hit the housing market. And I think that things are, so if you've got the capacity, and if you look at also sort of savings rate, and if you leave the money in the bank, if you've got a deposit, for example, if you leave the money in the bank, what is that going to achieve you? Whereas if you kind of put it towards a property, whether be it a buy-to-let, be it, bank of mum and dad borrowing the money for a help to buy property, for example, you're going to get far more for your money if you kind of invest it in property than you are if you leave it in the bank. So again, I think the numbers work for themselves. So I would suspect that, yes, we are going to see a little bit of a blip in the market for the next sort of, 9, 12, 18 months, but I would suspect that it will come back very strong.
Yeah. Okay, brilliant. I suppose then to summarise, current applications, if you've had your survey, you should be heading towards a mortgage offer soon, and banks will honour that. The applying for a new mortgage is a case-by-case scenario, where it's going to depend on your circumstances, the LTV, as we refer to it, loan to value, and underwriting review, I suppose. We're not yet seeing the Bank of England the rate of that reduction passed on to purchasers just yet. But hopefully it's a minor blip on the long-term kind of people buying homes and taking out long-term mortgages.
That's right. Yeah.
Is there anything else you wanted to cover off, Hiten, or anything you've had from lenders or clients?
Not really. I think the only thing, I think patience is going to be a virtue. I think the fact that I think yes, it might not seem great at the moment with the limitation in the lending market at the moment. However, lenders are slowly drip feeding and coming back into the market. So I guess just I would say that start putting the wheels in motion, because the sort of the pre-work before you start the mortgage process does take a couple of weeks in order for you to compile paperwork, etc. So let's start looking at that. Let's try and sort of see whether we can start narrowing down some options. And the moment, as I said, the lenders come back into the market, we can get the ball rolling and really sort of, and you can probably secure yourself a good deal as well.
Yeah, brilliant. Well, thank you very much, Hiten. Always a pleasure to talk to you. And I hope you've all found that really useful. But like I said, if you've got any queries at all, do get in touch and we'll be happy to introduce you to Hiten directly. If you've got any questions or queries relating to a new application or an ongoing one currently that's in the process. So thanks very much. Take care, everyone, and keep safe.